I could talk about all of the stats that sits behind Bitcoin in depth, like I do every day. But in this particular video, I don't want to be talking about the inflows, the outflows, the shrimp wallets, the dolphin wallets, the whale wallets, the sharks, or even the Kraken. No, I want to talk a little bit about the price action, and more specifically about a comment that I've seen on the YouTube channel. And I also want to kind of draw a line in the sand and kind of just communicate what's actually going on in this space. There's a lot of noise, there's lots of just absolute BS out there, and well, I thought I'd take the opportunity to A, correct the comment, and B, actually, kind of get everyone on the same page. So as I get into it, you know what to do, smash that like button, and with all that said, let's get on into it. So we're going to jump down into this chart in a moment. Okay, where we talk about Bitcoin paired up with USDT on the hourly chart, right? The nitty gritty of the here and the now. I will get into that, but I really actually want to zoom out just a fraction further. The comment in question is all about how this channel is trash. The 50-day EMA surpassed the 200 moving average, and it happened 3 times in Bitcoin history. The bottom's already in. This is bullish. We are not bearish. And the usual kind of BS that you see from a lot of the moon boys, yada yada. But I do kind of want to just highlight a couple of things. So one, the history in Bitcoin is so small at the moment. In fact, let me actually come back. Let me turn this one off and come over into our macro chart here for a second. Bring this up into our weekly and just bring this into view. Okay, we've obviously been talking about bearish times for a while. This is not an unusual or new thing to the channel. We've been analyzing the history of Bitcoin quite extensively. Now, the history of Bitcoin is new, essentially. There isn't actually that much data here, and we've got different variables going on this time around than we had in the previous 2 bear markets. Now, that, obviously, to a lot of people, doesn't really sound like a lot, and a lot of people unfortunately are relying on really shit indicators that basically essentially are telling you that the bottom is in without actually taking consideration or taking stock of the current situation that we find ourselves in with the history of Bitcoin being rewritten. Okay, so something new is happening here, and to look at the history here and think that this happened before, we're going to do it again, is actually leading you down the wrong path. Okay, so we've obviously taken a look at all of this data in quite a lot of detail. I've been through it a fair few times on this channel, and yet still I see these nonsense comments. So let's just kind of recap this very, very briefly. In 2014, we saw an initial pullback of 67%. It was 133 days after the peak. We bounced up, we fell down, and it was a total of an 86% bear market that lasted 413 days. Now, when we came down here, we actually came down to the 1.236, and we bounced from the 1.236 fib level. Okay, so this is a 3-wave structure, and we went down to the 1.236. We then go up, and obviously we start the bull market down here in January of 2015. We rally up. We hit the all-time high in 2017. We had an initial pullback of 69%. It was a quick one, only lasted 56 days. We bounce up, and then we come down into the actual bear market low, falling just a little bit north of the 1.236 fib level. This was a total bear market of 84% and lasted 364 days. From there, we go up into the next bull run. We come up. Obviously, we had the 72% COVID crash, and then we push back up again. We obviously hit 2 peaks, a double kind of peak here, one in early April 2021, we pull back down in a 56% crash in 70 days. Then we come up into an all-time high, and now we've come down. So far, the bear market low has not been in. I know a lot of people were really confident in the June lows. Obviously, we weren't. We were very much saying that we had to come down into new lower lows, etc., etc. And if the bottom was in for the bear market bottom, then again, you couldn't just look at the history of Bitcoin here and say, you've done exactly the same thing, because you haven't. We actually went down lower than the 1.236. So far, we hit the 1.382 fib level. Now, that's a significant difference on the previous 2 on that one variable alone, let alone the fact that we did actually drop down not as low as we had done already. Okay, we've actually only come down 70 or so%, not the 86 or 84%. And then, of course, we've got the time differences as well. There's a rate of decrease between the 413 days and the 364 days, yet over this side would have been the shortest bear market in Bitcoin history, right? So again, that's something else you'd have to consider and have to be new. Of course, we are looking at this as new lower lows. We were correct in thinking new lower lows. It could have been FTX that pushed it over the edge. It could have been anything else that pushed it over the edge. The market was incredibly fragile, was not bullish. Believe it or not, there's a lot of bullshit in the space, and a lot of people are being told that things are bullish, and they simply are not. And in this video, I'm going to show you some of the reasoning behind why I think that. Not only does this chart give me a very clear indication of bearish times, and you probably need to learn how to read the charts before commenting that kind of bullshit on the channel, because I will pick up on it and I will call you out for it. So just understand that, you know, there's a lot of things going on. It's not as simple as just looking at a couple of moving averages and thinking that you're in a bull run. That would just be absolute insanity. And I mean, if it was that simple, everyone would fucking do it. So let's go ahead and move on in. So let's take a look. Here we have Bitcoin paired up with USD on the 1 week chart. Bitstamp is our data source. Why am I talking about Bitstamp as our data source? Because it has the most amount of data there. We're using USD rather than USDT. Because that one, again, has the most amount of data. Let me get rid of the stochastics, and we're going to take a look at these two things. Okay, this is a very simplistic way of looking at it. Obviously, we've got our three-wave corrective patterns right there and there. You can see those, 1.236, 1.236, and at the moment, our three-wave structure has taken us down lower than the 1.382. Okay, so we have to understand that we are moving in a vastly different area, at least according to the fib levels and structure as well. Okay, so what two lines have I got drawn on here? Well, we have a 200 EMA and we have a 50 EMA. And what is about to happen right up here? Silence. Pause for silence because it's so obvious. But nonetheless, this here is a death cross in the making, right? It's about to happen. We're about to have the 50 EMA cross the 200 EMA. This would be the definition of a death cross. Now, I'm not a big fan of moving averages, exponential moving averages, simple moving averages, you name it, it's an average. It's an average price at the end of the day. And if you're going to be making financial decisions on an average, then you're really ignoring the outliers. You're ignoring the upper end and the lower end, right? You're just looking at the average, and that's pretty bad, right? You don't want to make financial decisions on these averages. Now, I've been using the 200 EMA recently because, unfortunately, there's a lot of traders within the space that seem to like to use the average pricing, and therefore price reacts to it. So when I'm trading, I'm going to be trading from a 200 EMA. Am I going to be paying terribly too much attention to the 50 EMA? No, I'm not. So the 50 EMA, the 100 EMA, they're okay. They have use cases. You can kind of keep an eye on them. But essentially on these kind of macro views like this weekly chart right here, the 200 EMA is king. The 200 EMA in traditional stock market or Forex markets is used as a trend filter. If you're above the 200 EMA, then you are in an upward trend. And if you're in below the 200 EMA, you're in a downward trend. So, you know, essentially that's what you look at. You look at for these moments when you're below the 200 EMA, specifically over here in the bear market of 2018, you can see we broke below it. As soon as we broke above it and we're up, we're good. COVID pulled below a little bit and then we went up. But we are significantly below the 200 EMA for the first time in Bitcoin history. Yay, there's something else that's new here in the case of BTC. Obviously, we take a look at the history here. We have never crossed on this weekly chart for a 50 EMA and a 200 EMA. So there's another new thing that's about to happen here in Bitcoin's history. So that's going to be interesting. Is that going to be the next catalyst to the downside? So I don't think the bottom is in anytime soon. Could be 3 months, could be 6 months, could be 12, could be 24. Can't time the market. What I can tell you is the data here is definitely not bullish. It's definitely bearish. There's some short-term stuff going on the smaller time frames for sure, but on these larger time frames, you can't be confident in this market until you get the right data actually being represented. And of course, we can't even be bullish when we have such bearish times out in the bigger global economic climate. There's things going on in China that probably these people who are commenting on this YouTube channel just simply aren't aware of. And you know, unfortunately, those things are pretty big catalysts for major turbulence in the economic climate. And I do think crypto is going to get affected by it. So yeah, we've still got some more downside to come, and that's an unpopular opinion, it would appear. But I've been saying this pretty much since June, so I'm used to it. But to come on the channel and kind of leave a comment saying that the channel is trash when you're quoting some absolute bullshit, I just think is a really, really disrespectful. So I'm not going to ban you. I'm just going to leave your comment there for now. And I will come back to you when we go down into a new lower low to see how your financial decisions have affected you. But for now, that's kind of where we are on the bigger macro landscape. So let's go ahead and jump down into the here and the now. Let's go into the price action on our Binance Binance to USDT pair. Let's bring this up here. Let's put this into auto for a second, and we'll take a look at this current position. So yesterday we were talking about a 5-wave move to the downside that completed within it's just ridiculously quick. So basically in here we had this 335 ABC correction, right? We can see we come 1, 2, 3. Up here was 4. Down here was 5. We just touched on the 1.236 and we rallied up. Okay, and in the moment, it looks like we are at an interesting point for Bitcoin, because if we take this high point here, I'm going to have to take it all the way down to this low point. That makes it very, very difficult to see. So let's go ahead and move this over here. And we're going to move this up just a fraction to here. Okay, we can see that we've come to the 1-to-1 ratio just up here. You can see this was 16,507. We had the wicks above this area, and that's pretty acceptable. This basically means that what we've done here is an A, B, and C structure. And right in this little area here, we have the resistance. And you can actually see it all in this consolidation here, right? So this particular area on our hourly chart was support, or as we would look at this as supply and demand, this is where the demand was coming in, right? We're able to kind of stay above this area until the price fell through it. And right now we're retesting this area, but this time, instead of support, it's resistance, and this is where the sellers are. Okay, you can kind of see it right there. Okay, so this seems to be the obvious area for rejection. Not only have we done 3 waves up, A, B, and C, but we're also hitting this resistance area, this previous area of demand turned to supply. So the expectation here is a pull to the downside. We can also see that we're overbought on this 1-hour chart. I don't think we're going to see terribly too much in the way of downside here, though. Maybe just a quick corrective move, maybe turning this previous area of resistance into supply, and then we'll rally back up again, just a fraction more, heading up into that higher range amount, maybe just short of $17,000, double top kind of scenario just there. Now, with that being said, why do I think this? Well, not only are we overbought on the 1-hour chart, and we've got to have some kind of progression to the downside to kind of correct that out, but the 4-hour chart has been moving quite nicely to the upside, but is not quite there yet. So a small pullback and a bit of a rally to the upside could be something that we see. The same with the 8-hour. We've got some progression to the upside here from the oversold to the almost overbought range, meaning that there is still progression to the upside on these smaller timeframes. So before we can move down anyways, we have to move on up. And my original expectations here are that we move up towards the $17,200 to $17,400 level. So all of this here could just be a single A wave by the time it's finished. We pull back and we rally on up into that range up there. A double top, though, is our minimum expectation. So if we do come to this white line just here at 16,812, then get rejected, that could actually be the end of this structure, double top being bearish, and then we break on down. Now I'm going to bring this up into our 12-hour chart here just for a second, just so you can kind of see that we are looking at progression to the downside. Yes, that there would be a new lower low. You're going to love that, Blender guy. You're going to love it. Trust me. So nonetheless, we're going to be looking for this downward price action. Now, up here, you can see that we've got loads of progression to the downside on our stochastic on the 12-hour chart. But it doesn't stop just there, because the 16-hour chart also has the progression to the downside. The 20-hour chart, yep, more progression to the downside. And the daily chart, yep, got to come down as we are up in the overbought area. So limited progression to the upside, in my opinion, and definitely a lot more to the downside. We can see that the B wave still has to come up a little bit higher, though, so do expect the price to move upwards just a fraction before we do pull back down. None of this stuff is instantaneous. Although this market does move fast from time to time, it can also drag its heels. So just bear in mind that this could take a little bit of time before it actually plays out, but the expectation is a small move to the upside and then down into new lower lows. And, this is going to continue for a while because, why would it not take a while. Until we see the big money coming back into the space, simply is going to be a long, drawn-out bear market. We see billionaires all over the place who are saying that cash is trash years ago, now saying that cash is king. You see them stockpiling massive amounts of cash right now, looking for the next opportunity, because opportunities are probably only 3 to 6 months away, maybe a little bit longer, and we are going to start seeing the retail investors sell their assets to these whales at a discounted rate. That sounds unpopular. It sounds unrealistic, I know, but let's face it, it is how this world works. And to look at a price chart, look at an average price and think that you're going to be going to the fucking moon because of it, I think is absolutely ludicrous. But don't take my word for it. Do your own research, come to your own conclusions. Remember, I'm not a financial advisor. All I tell you is as I see it. I'm going to leave this video right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, you know what to do. And until the next one, have a fantastic day.